So this is chapter 6, lesson 2, and in this lesson we're going to be covering routine. Now this is going to be essentially everything that I do, you know, my routine for when I go on the chart and I begin my analysis. Now a lot of you ask me, and a very common question I get is, how do I develop a trading plan? And I understand all the theory and whatnot, I kind of know what to look for, but how do I kind of piece it all together in a simple trade plan? And essentially, this video is going to help you guys and aid you in building your own trade plans. And you can literally copy this, but add your own little preferences and twists to it, right? This should be like the final piece of the puzzle for many of you, right? So in this lesson, we're going to cover the routine I do to frame my trading every single day, the weekly expansion slash the monthly expansion into the weekly profiling, followed by the daily expansion and daily profiling, then the intraday framework, and you're going to see there's a large emphasis on the power of three. Now, the emphasis of the power of three began in the first lesson of this chapter using the open high low close and open low high close. Um, Everything is essentially a power of three. The framework we're using now, we're going to make the distinction between what framework and entry is. Essentially, you have a framework and you're finding an entry within the framework. We're going to touch on that. And using the Forex Factory calendar to aid us in our weekly and daily profiling. So the first thing I consider is this, the weekly slash the monthly expansion, more so the weekly expansion, right? The most energy and effort spent by me is depicting where the expansion of the next weekly candle is likely to favor, upside or downside. Notice how I didn't say the close of the candle. It's where the expansion is likely to be, right? Where, you know, the main portion of that weekly candle is likely to trade to. I don't care about getting the close. For example, the fair value gap you're seeing, we could have traded all the way into it and then rejected, after. I wouldn't want to catch the shorts at the end. I'd rather catch the expansionary long move, right? It's the expansion, not where the candle closes. Make the distinction, right? Now, the weekly time frame, this is where the meat of your analysis is as a day trader. It's in understanding where the weekly candle's expansion is going to favor. This is the main thing I try to sieve out as a trader, and you see how much emphasis I place on this inside of the weekly commentaries. Every single weekly commentary, and the people that skip them, you're doing yourself a disservice, right? Because the weekly commentary is basically aiding you in your weekly expansion. There is no one lesson on bias, right? Bias, there's not one way to pick out a bias, price, where price is changes, narratives change and whatnot. The weekly commentaries is essentially the entire lessons of bias, right? Now, inside of the weekly commentary, do you see me ever starting on a 1 hour chart, 4 hour chart, or an intraday, even a daily? We begin it on the weekly or even higher, right? Now, without knowing where the weekly expansion is likely to be, I remain a spectator in the marketplace until a day of the week it is clearer to understand where the weekly expansion is going to favor, typically a Tuesday or Wednesday. There are some times where I don't understand, or from the candles that are in front of me, I'm indecisive. I'm kind of neutral. It could go higher or lower from here. I just need more information. I need to see what the candle does. Is it making a high first or low first? Is it taking out, buyers or sellers? By Tuesday or Wednesday, it's kind of predictable what the weekly expansion is going to favor, and therefore we can go in and profile the remaining days of the week that, you know, not the ones that we missed, but let's say I get on side on the Wednesday, I will probably know the profile for the end of week, right? Now, a mental barrier most traders have is that they believe the weekly chart moves or behaves differently to that of a 1 hour chart. Remember, you're reading the candles, and the lesson in this chapter before this speaks about that. The only difference between the weekly chart and the hourly chart is that the candle for the weekly chart takes 1 week to open and close, and the hourly chart, the candle takes an hour to open and close. The way they print is the exact same thing. Remember, three things always, right? Focus on this all the time. Focus on where price is right now, where it came from, and where it's likely to go. Now, shift your attention to the chart on the right. Let's apply that for the next candle. Forget the candles with the two arrows exists, right? And this is from your guys' weekly commentary. This isn't a cherry-picked example. We tagged into that fair value gap and we took out the previous week's high. For the next candle, Where are we? Where did we come from? And where is it likely to reprice? Well, we came from a fair value gap and swept a previous week's high and became lower. That weekly candle's low is still intact. So where are we likely to reprice? Well, at least underneath that up candle's weekly low. So you can be short and your weekly expansion is likely to be lower until that point. Something simple, right? Now, once we have our weekly bias sieved out, we can then begin to mold a weekly profile for how the weekly candle from open to close is likely to form. Now, before we do that, I want to touch on the monthly chart, right? So at this point in the mentorship, we should have an understanding that price is fractal. 5 daily candles build a weekly candle, and 4 weekly candles build a monthly candle. In saying that, we can use the monthly chart to understand where we want to see the weekly candles print up towards. If you're bullish on the monthly candle, you shouldn't be then bearish on the weekly. You see how they coincide together, right? I like to check the monthly chart once a week. I give the most emphasis to the first 2 weeks of the monthly candle's opening, as this is usually when the Judas swing of the month is placed in and the monthly candle is going to start to probably expand around this time. In saying it's going to expand, the weekly candles, right, they should also point in the direction to the expansion of the monthly. And that's going to help us arrive at a weekly bias if the weekly chart is a little unclear. If the weekly candle is a bit tough, and you kind of are indecisive, fall back to the monthly chart. See where is the monthly candle likely to expand towards. Something clear like this, right? You see if I go back, you see how we have fair value gap? It's just the opposite, right? We swept the previous month's low into that fair value gap. Now there's 2 weeks remaining of this candle. Where do you think the rest of this candle, the time of the candle is going to be used to expand towards? Probably the high, and this isn't cherry picked, and you can probably see where the GBP USD monthly candle for January is printing towards, and you can compare it against this lesson, right? Now the goal is to understand where the weekly expansion is likely to favor, so spend your energy in sieving this out. I cannot emphasize this is your beginning point. Given that you understand the fundamental standpoint, central bank interest rate, your fundamental bias and standpoint, in terms of your technicals, you are beginning with where is the week likely to expand to. Now, if it's difficult to sieve this out, I've taught you this now. Fall back to the monthly chart. If that is still unclear, it does not hurt sitting out Monday and Tuesday to see where the remainder of the week is likely to go. So weekly profiling and Sunday's opening price. Now, after sieving out whether the next weekly candle is likely to favor expansion to the upside or downside, the next thing to consider is the weekly profile that is likely to be at hand. In what we expect to be a bullish week does not correspond to every day of the week being bullish. It's more likely you're going to experience a Judas swing on a weekly level early on in the week before the bullish expansion. Now, I got you guys to do a homework. Chapter 3, lesson 2, I remember. And it's all about weekly profiling. And the reason I've done it is not to be mean and waste your guys' time. It's because that is going to help you understand the anatomy of the weekly candle. That not every single day is going to be a bullish day in a week. You're going to get a level of Judas swing. Now, a lot of you kind of struggle with how do I know when the week, where it's going to expand to. Sometimes I get caught off with reversals and I thought Monday put in the high or Tuesday put in the low, or whatnot. So now we're going to have Sunday's opening price and I'll teach you how to use it. To gauge the Judas swing of the week, we fall back to the Sunday opening price. Now that is going to be, I believe, 5 p.m. New York time on your charts. It's going to be the Sunday open. Sunday opening price is the open of the weekly candle. Now on a bullish week, we want to see manipulation early on in the week beneath the Sunday opening price and then expansion higher through the rest of the week's trading. This is the key to understanding the weekly expansion and when the opposing end of the range is placed in. If on a bullish anticipated week you trade beneath Sunday's opening price on Monday and then have a market structure shift to the upside on the hourly time frame, right? The hourly time frame. This is not on a 15, on an hour. 4 hour is, it's a bit too long. It will take a long time to notice that there's a 4 hour market structure shift. 1 hour, from my experience, is a sweet spot to understand like a weekly reversal, right? And after that, hourly market structure shift, if you're clearly expanding towards and above Sunday's opening price on Tuesday, it's more than likely that the low was placed in on Monday, and then the weekly candle is gonna start its expansion, right? So you can get the continuation of longs on the Wednesday and the Thursday. So if you want to look to the chart, right? This is Sunday. Monday trades lower, short-term high. Tuesday, higher time frame PD array, right? Remember, you're framing it always with the PD array matrix. So let's say there was a news event on the Forex Factory calendar. Now, from this low, this is going to be higher than this high. So you have a high, lower low into a PD array, higher high off the PD array with displacement. That's your market structure shift, right? Now, if you see that, that's probably the opposite end of the range on an hourly time frame, and you'll see the expansion long Wednesday, and again long on the Thursday. Um, Friday could go long again, given that Thursday hasn't traded into a higher time frame PD array here or swept a weekly high or a daily liquidity pool, or Friday can go back into the range. But this is the expansion you're focused on Tuesday, Wednesday, Thursday, given that there was a market structure shift hourly on the Tuesday, right? Now, to further aid in the weekly profiling, we have to use the economic calendar. The economic calendar is the most underused and undervalued tool to a trader. People on social media, on YouTube, how many of them do you see give the respect to the economic calendar, to the level that we do in this mentorship, especially every single weekly commentary, right? That economic calendar it's your map to your weekly profile, right? You need to give a large amount of attention and respect to the economic calendar. It's going to help aid you in understanding where the likely high or low of the week is going to be placed in. If Tuesday has a red news driver, then it shows to us as a trader that Tuesday has a tendency to place in the opposing end of the range, as it has a reason for manipulation to take place, right? It's going to be, a volatile day. Now, using the economic calendar in line with the Sunday opening price is a very efficient way in understanding where you are in the weekly profile and when to expect expansion. Always have Sunday opening price marked out on your chart and see if price is remaining above or below it. If on a bullish anticipated week we trade under and then above it and remain above it, then the weekly candle is most likely trying to expand higher. It's just like, you know, chapter 3 midnight opening price, but that's for a daily level. The Sunday opening price is for a weekly level, right? Now, remember to also use your higher time frame PD arrays to frame where highs and lows should be made. Like the chart on the right, you see that Tuesday traded lower, then Monday into a discount array, and then expanded higher towards midnight opening price. This shows the expansion of the weekly candle is likely to unfold for the rest of the week, and you can entertain your weekly bullish bias going in on the Tuesday New York, Wednesday, and Thursday, possibly Friday as well. So continuing on from the last slide, this is an example of using Sunday's opening price to gauge the weekly profile. From the weekly and monthly, we were expecting higher prices on the euro. This should translate into bullish daily candles. However, we know that not every daily candle of the week will be bullish as there's a level of Judah swing. So you see here I have the days drawn out: Sunday with the two small bars, Monday, Tuesday, Wednesday, Thursday, and Friday. Now, having Sunday's opening price outlined, we can see how price is moving relative to the opening price. We have a daily breaker block that rests underneath Sunday's opening, right? Which is a nice area we can come from the Judah swing of the week and expand, making the high of the week off that, right? Think of it like this: if this was your daily chart and that's your daily open, and you have a 4 hour breaker block or 1 hour breaker block right underneath that, that's something to place emphasis on for the opposite end of the range. It's the same thing for weekly using the Sunday opening price. Notice how when we dipped under Sunday's opening price and into the bullish breaker, we had an hourly market structure shift. This is an hourly time frame uh, where this chart was taken from, right? This is a key signature in price I look for to start entertaining my bias. Now, notice how this is similar to intraday chapter 3, how we wait for protraction above or beneath midnight's opening price and then displacement causing a market structure shift to then entertain our bias. This is how you use that idea on a weekly fractal instead of a daily fractal. Notice Monday's trading, how we ran the low and then expanded and broke the high, responsible for the lower low, right? That's what's the market structure shift. With the context of it being away from a bullish breaker inside of an expected bullish week, we can hunt expansion for the remainder of the week until, an opposing higher time frame PDRA is met. So for example, Monday, we traded down lower. Now we're inside this breaker. Got a high, that candle's a lower low. Now you get that move away from it. Now, this towards the end of the day, small candles, it could still not be enough in real time, right? Now, when you see Tuesdays moving back away from it, right? When you see this move, especially this candle, you see it's going back towards the Sunday opening price. What does it show? It showed that we dipped lower, we made the low. Now the candle's expanding. It's beginning its expansion. This is where you want to find your longs, right? As the candle is expanding, you're trying to get in, day trades to ride this expansion from underneath the Sunday opening price. Chapter 1, Lesson 3. I told you guys the goal of a day trader. I recommend after this, rewatch that and come back to this slide. And you're going to see the link you can make between the two videos. Now, from Tuesday's trading, you can anticipate Wednesday to expand higher. Look at Mondays and Tuesdays trading relative to midnight opening price and imagine a bullish weekly candle. Think about just a candle forming, right, in your head. If you see the candle, right, it dips down and is bearish and it's coming up now and it's, the opening and it's coming back to its open and it's made that low, it's going to probably push up to make the high. Now think of that on a weekly candle. This is what it's doing. It will dip down and now as it's forming, right, if you go and watch a few 5-minute candles, you know what I'm speaking about. You'll see a lot of times they go the opposite way and then they come up and then they expand the other way. It's essentially this, right? The Judas swing, then the expansion. Now, in saying that, look how close Tuesday got to Sunday's opening price. Given that Monday traded down lower into the breaker block and Tuesday's coming back up to Sunday's opening price, Wednesday is probably going to carry on that expansion, and you could have expected that move, right? You could expect Wednesday or Thursday or both to have that kick to make the high of the week, because now you've come from the low of the week back to the open, you're going to go make the high. That's how you could expect Wednesday to be a very good, and Thursday to be a solid day for entertaining your weekly bias, right? Now, apply the same idea and use already for the midnight opening price intraday to the Sunday opening price, and your weekly expansion analysis should become a lot easier. If we dip under Sunday's opening price and make a clear low and now displacing on the hourly time frame chart back to Sunday's opening price, you can hunt longs every day for the remainder of the week, as the weekly candle has most likely entered its expansion phase, right? Think of the weekly candle like this. Am I in Judas or am I in expansion? Now, Sunday's opening is going to give you the framework as well as understanding where the PDRAs are, right? Because without that breaker, it's a bit, why is it moving away from there? The breaker is what gives us the context. If we dip down into a bullish PDRA and we're expanding away from it with displacement, you know that you can entertain your bias for the remainder of the week, right? Note, if the Judas swing for the week is clear from Monday and there is a clear higher time frame array to continue the Judas into Tuesday and Wednesday, I will still take day trades into there, right? If I see that there's a daily breakout and Monday began the move towards it and there's still room for Tuesday to go towards it, I'd take that, that Judas, that weekly Judas to there, because that's going to offer a day trade. But I just won't counter trade my daily expansion. My weekly expansion, I will take trades opposing it, given that it's very clear. If it's not, then I'll just wait for the expansion to unfold and try to get in line with it. So what to do if your weekly profile was wrong? Sometimes your anticipated weekly profile could have been wrong. You may have anticipated a bearish week, but it was a bullish week, and that happens. That's happened to me on the weekly commentaries. A skill we need to have as traders is being able to adapt and realign ourselves with price. Now, perhaps it was a week you anticipated as bearish, but we traded up higher, offering little to no Judas swing on a weekly level. by midweek the profile should be clearer. And the use of Sunday's opening price will help you aid in realigning yourself with the weekly profile. As you know, you can see if you're likely to continue to expand from Sunday's opening price or reverse after hitting a high time frame PD array. One thing to note and bear in mind is if Wednesday expands and Thursday retraces back towards Sunday's opening price, it doesn't mean Thursday placed in the main end of the range, right? Unless you hit a high time frame PD array. It could just be a retracement for, the rest of the week. I'll give you an example. Going back to this chart, right? Say we moved that up higher from here and Wednesday was, a bigger move than what I drew here. If Thursday just comes back down into Wednesday's range, let's say there was a 4 hour PDO array that was left in Wednesday's range, that could just Thursday can just be a retracement. If Friday has a news driver, Friday can carry on that, you know, that continuation for the bullish close. That's something to bear in mind as well. So after we got our weekly profiling done, we're going to then go into daily expansion. So after sieving out the likely weekly expansion, every day I'm now using my weekly profiling to understand the likely daily expansions for each daily candle of the week. If there is a clear Judas swing present heading into an array, then I will frame trades towards that and remain at my hands and wait for the expansion to my intended weekly bias to unfold before finding trades in line with it. Now, if there's no clear Judas swing present, then I will remain on my hands and use Sunday's opening price until I see my weekly bias's expansion begin. This is a big reason to why I let Monday play out. I see how Monday trades relative to Sunday's opening price, and if there's a clear continuation of Monday's trading, or if Monday placed in the opposite end of the weekly range, and if I should wait for the market structure shift in line with my bias. That's why Monday is very powerful. It begins the profile. Essentially, it's like this. Letting Monday play out is like letting the Asian range form. Think of it like that, right? My daily profiling is paused if I cannot sieve out whether the daily candle is going to favor expansion to one side over the other. I remain a spectator in these circumstances, right? So Wednesday, the 18th of January, 2023, the daily candle for the DXY is a good example of when I cannot sieve out the next daily candle's expansion and I remained a spectator. You guys can go on your daily chart for the DXY and look at that candle and you'll see why, right? Now, remember the goal of a day trader, and it was mentioned to you guys early on in the mentorship in chapter 1, lesson 3, which I mentioned not long ago. The goal of the day trader is to sieve out whether the weekly expansion is likely to favor one side over the other, and then to trade the daily expansions that are in line with the weekly expansion. If you cannot sieve out where the expansion is towards, then you will struggle in your trading as you do not know whether you should be a buyer or seller, and you then cannot sieve out low probability trades that oppose their likely expansion. You'll probably end up taking a retracement with a take profit that will not be met as it's a retracement, and more times than not, you'll get stopped out. From this daily chart for GBP USD, we can see a retracement into a discount fair value gap. Notice the up candle away from the fair value gap. This indicates expansion of the range and buy side liquidity to be targeted, therefore expecting the daily candle's expansions to be higher. Note that you can also use the fair value gap as a short-term draw on price when retracement was offered, as every single daily candle offers intraday trades and scalps. You are focusing on where the next daily candle is likely to draw to all the time. You're constantly flowing from PD arrays to PD arrays and liquidity pools, right? Lesson 1 of this chapter will really aid you in your weekly and daily expansions. The bulk of your work resides inside weekly profiling and the daily expansions in line with your weekly profile, right? So let's just talk about this chart quickly. Fair value gap, this candle's high to this candle's low. Now, when this retracement was offered and the weekly is pointing towards higher prices, right? You know that this is just a daily retracement. Knowing that this fair value gap is a draw, you could take the retracement on the daily chart into these candles, right? And you could be short from these candles up until this discount PD array. Now, when you see this candle, right, open, low, high, close, you can expect the next, daily candles to reach for this buy side liquidity pool. That's how you sieve out your, where the daily expansion is likely to be. From this fair value gap and this candle weight, you know that you're favoring bullish daily expansion. So you'd want to be a buyer going into the day until this PD array is met. But the buy side liquidity pool is met, sorry. So when I've determined whether I'm expecting a bullish or bearish daily expansion for the next daily candle, I then used daily profiling to frame how and when the daily candle should expand towards my bias. This is where chapter 3 teachings will come in and aid you heavily. We always need a level of consolidation. Everything stems from consolidation. I hunt and wait for the market to enter a consolidative state. This is the accumulation phase of the Power 3 model, which is the only thing and the only framework I hunt during the day. The reason we like the Asian range to consolidate is because it sets up a nice Power 3 play for our intraday framework. Once accumulation occurs, we hunt manipulation. The manipulation we want to see is beneath midnight opening price if we're bullish, right? The midnight opening price always remains on my chart for the day. This is your measure of expansion. Everything beneath it being protraction and above it being the expansion of the daily range, again for a bullish example. The key is this. When you are bullish and the Asian range is consolidated, you are waiting for a move beneath midnight's opening price. When you are under midnight opening price inside of a consolidated Asian range, this is where the best buying opportunities form. The goal is to get under or close to midnight, right? Now, close meaning close under it or close a bit above it, right? The idea behind this is this. If the expansion of the day is likely to be higher, then if we can get under or close to the midnight opens price, we should be able to ride the expansion above midnight opening price, right? And this is the distribution phase of the day. I want you guys to view every single day as a power of three, right? This is the name of the game. It's power of three intraday Asian range accumulation. You're waiting for a level of manipulation and you're waiting for distribution. The key is this: understand where the accumulation was. You need to understand the market manipulating, right? And you're trying to trade the distribution, right? Now, accumulation at the open, this is what we want to see. So Asia to midnight, we want to see accumulation. Now, manipulation, we want to see from midnight to 5 a.m. with 2:30 to 3:45 being the sweet spot for the opposite end of the range, right? A lot of times from 2:30 to 3:45, you'll see that London places, the opposite end of the range between that time. And then the distribution for the remainder of our trading day, which can extend to midday New York, which is, London close kill zone. This is all I hunt every single day. It's always a power of three. I'm waiting for an accumulation, manipulation, distribution. And you'll see it comes in the form of a market maker model a lot of times. Now, the manipulation phase can be prolonged and it's not always just one move upwards. The market maker models that I taught to you guys in chapter 4, lesson 3 are all power of threes. There's an initial consolidation being the accumulation, the opposite side of the curve being the manipulation. Now, opposite side of the curve means, the buy side of a market maker sell model, right? You see how it's not just one sharp move, it can be a few legs higher, right? Depending on, the expansion into a PD array. If the PD array is a bit far away, you know, 30 odd pips, 40 odd pips away, you can have a few legs of manipulation into the PD array. It's not just a one sharp move all the time. That's what people don't understand, right? And the actual intended side of the curve is going to be the distribution phase. This is the idea I want you guys to look for every single day. Like, I want you guys to look at the market like this every single day. You're always considering a power of three framework for the day. We sit out the accumulation phase always. In London, if the manipulation is clear, you can scalp the move of the manipulation. But remember, the meat of the move is the expansionary distribution. Now, you may be thinking once price gets above midnight opening price on a bullish day that I've missed all my trade opportunity. This is false. This is where the best trades come from, under midnight opening price on a bullish day. The most explosive moves come from under it. But if price displaces above midnight's opening price, you can frame retracements into fair value gaps and other discount arrays, that rest close or at midnight's opening price as you can expand higher from there again, right? So for example, accumulation, Asian's range, right? You see how this is the anatomy of the bullish candle. Bullish day, opening here and closes around here. And the high being here and the low being made here. Accumulation, now dip down to make the manipulation, right? You can see around what time it happens as well. That time that we said around, 2:30 to 3:45. Now we're waiting for displacement above, midnight's opening price, preferably a market structure shift. You see how we get that? This is the distribution phase you're trying to trade. Now, any retracement, let's say we expanded up higher here, this little fair value gap from this candle's high, to this candle's low, it's resting close to midnight's opening price. You could get an entry there and still have a lot of, distribution left for a bullish expansion. You wouldn't want to go, long here where, you're kind of far away from the opening price. It could retrace deeper and, kind of stop you out if your stop was here or something. You want to get close to midnight's opening price. This is the key. And you'll see in a trade breakdown video using, I think it's the first one, the US 500 one. You'll see how I use midnight's opening price and I frame a retracement back to it to then get long again, right? So what do I look for intraday? When it comes to my actual trading day, this is what I look for. Power of three, market maker model. That's it. That's the framework I'm looking for. The entry comes from the framework. Now, before I go down to my intraday charts, I always note the local nearby for our daily PD arrays. At worst case, I'll fall back to a 1 hour. It's rare I do that. I usually use the 4 hour and the daily PD arrays to frame, the manipulation and the expansion into. All you are doing is this, monitoring price moving through the PDA matrix. You only entertain price if it has come from a high time frame PD array and is trading towards your draw on price, or if price has to be at a high time frame PD array. If price is at a PD array, there's a trade opportunity, right? Because from PD array, price is gonna likely to reprice away. Or if price already traded away from a PD array, you know that it's already begun its repricing. Where is it likely to go from the rejection of this PD array? Frame a trade in that direction. If that is not met, sit on your hands, right? The hard work is at the higher time frame, daily and weekly, and finding out where they are drawing to. Where is price? Where did it come from? Where is it repricing? You always want the higher time frame minimum 4 hour to be at PD array or repricing away from a PD array. Once that's met, I do as follows. Midnight opening price lined out and any news events for the day are noted in a notebook I keep by me, right? This aids in my daily profile to frame manipulation and distribution. I'll wait for price to trade above or beneath midnight's price and I'll await a displacement that causes market structure shift in line with my bias. The market structure shift preferably should be at a key level, such as running previous day's low or a discount array for long setups, and the opposite is true for short setups. It should be from a premium array. The displacement I look for is between a 15 or 5 minute chart for intraday framework. Sometimes one is cleaner than the other, right? I get asked a lot, am I looking for 5 minute displacement, 15-minute displacement? It can vary, right? You have to understand this. Time frames are a tool to us. There is no fixed best time frame, right? When the displacement that causes market shift occurs, I am looking for any retracement into a fair value gap plus a block. Block being order block, breaker block, mitigation block, just a block, right? The target you place should be 4 hour arrays or old daily highs to the left of your chart if you're bullish. If there is no opposing PD array, mark out the closest old daily candle high for targets when you're bullish. Not the previous ones, the closest. You can look to the left and just look for, a old daily candle that the closest one. If you look to the left where price is right now, look for the closest daily candles high or low, given if you're bullish or bearish, and price is going to be drawing towards that, right? If there's no clear PD array on your 1 hour, 4 hour to trade to. Notice how the entry is by no means complicated. It's literally just framework and waiting for the framework to tag you into a fair value gap plus block. That's the framework I'm looking for, right? Now, it's the framework that's important. The entry is simple. You have to understand the framework you're looking for. When displacement and market structure shift occurs, you're anticipating the daily candle to now form its expansion. This is where you simply use the lower time frame 5 to 1 minute chart to find a fair value gap plus block entry. Now, the way I like to do it is this. Begin, right? And I should say I begin at the 15 minute. If there's 15 minutes unclear, I go to the 5 minute. Now, if there's no fair value gap plus block, then I go to the 4 minute. If it's not on the 4 minute, then I'll go to the 3 minute and so on, 2 minute and 1 minute. I stop at the time frame it's found. Now, if it's found at the 5 minute, then it's the 5 minute. I don't go lower, right? If it's the 3 minute, then I'll go in the 3 minute. I don't go lower, right? Now, as price is expanding, I like to use the 5 minute time frame to see if any fair value gaps are left behind. And you'll see this in a lot of the trade breakdown videos I do. I look for fair value gap retracements. I line all of them out and I see, possible re-entries at them. Now, the fair value gap is a three candle formation with the middle candle having the imbalance inside of it, right? When the third candle closes, and just try and, perhaps listen to this a few times, like rewind it and listen to this a few times. The fair value gap is a three candle formation. One candle, the middle candle, and the third candle, where, the first and the third candle have a gap between their wicks. You see when the third candle closes and the fourth one opens, I'm monitoring that if it runs into that fair value gap. If it does, I'm fading that candle in that fair value gap to go lower if I'm bearish, or to go higher if I'm bullish, right? That's what I wait for, that fourth candle to open. Now, sometimes you don't get it. I'll wait maybe to the fifth or the sixth candle, right? Given that it's not moving lower, I'd always have that fair value gap framed for an entry or maybe a pyramided, trade for my overall position for that day, right? That's the thing that I look for, right? Now, one thing I want you to know is that the fair value gap and the block, they don't have to be exactly, like adjacent to each other. They could be like a little distance between them. Like you could have a fair value gap and a bit under the fair value gap is an order block or mitigation block. It doesn't have to be side by side. It doesn't have to be like that. Now, remember, you're waiting for framework such as the power of three and the market maker model to form, and you are simply finding a simple fair value gap plus block entry inside of the framework, right? Now, the image to the right is, of course, essentially the flowchart of what I look like. But remember, this is all in the context of the PDA matrix. The displacement market structure shift doesn't make sense if it's not from a PD array or running, like a significant pool of liquidity. It's all in the context of the PD array matrix. So this is an intraday example. This was a day that was expected a bullish daily expansion. So from midnight opening price, we are waiting for manipulation under the opening price for our intraday power of three framework. Now, notice how it traded higher first. That is not a move we'll entertain, and we are waiting for manipulation beneath midnight's opening price. You see how knowing the daily expansion, where it's likely to favor, will save you. Because if you're trying to take a retracement, you know, if you're trying to take this retracement into this fair value gap, this it doesn't make sense. You need to get manipulation under the low first, and you need to see displacement. That's gonna help you out. Now, I forgot to line this out. This would have caught you out. This is inside of a fair value gap. This is not inside the higher time frame fair value gap. This was inside the fair value gap, right? Now, the next piece of framework I'm looking for is a displacement creating market structure shift, and the move that creates the breaker block needs displacement to show that the algorithm is beginning to reprice higher, creating the daily expansion of the day. Once that occurs, I have an OTE on standby by using the low prior to the market structure shift, or any fair value gap institutional order flow entry drill is an entry mode for me as well. Now, preferably you want to match the institutional order flow entry drill with a block as mentioned. Here was a mitigation block with the run into the fair value gap. Now, this is all you need. This is as simple as this. This is all you need. The hard work is in the entry, is understanding the framework at hand, right? Manipulation under, now we're displacing. We're gonna, when the displacement with the market structure shift occurs, right? Like you see this big body candle followed by this. This is displacement, big body candle, right? Big body candle. There's a fair value gap in there. That could have been your entry, right? Now, it wouldn't have been, given that it's outside of the New York open kill zone. You have the fair value gap here and you have the order block here, one, two candles. When you get above that, retracement into there, look how close you are to midnight's opening price. There is still a lot of expansion. And this high is, at least a target. And look at the expansion of the day, right? Now you see how you wouldn't want to get in, quite above this high because the expansion will probably be exhausted. This is the type of trades you're looking for, and this is the type of trades, if you get in at this with your stop loss there, you can get a pretty good risk to reward. I'm talking maybe a 5R trade, right? Given that you're close to midnight opening price, because you understand there's expansion left, especially if calculating the ADR and there's ADR left on the table, even better. But remember, the closer you are to midnight's opening price, the more expansion you can, eat off that trade essentially, right? So things that I consider every trading day. Now, the thing that I consider the most in my day-to-day routine is the Forex Factory economic calendar, and it's when I timed my trading around the economic calendar. I progress exponentially. Like The difference between when I didn't consider the time of this and I did is, a lot more clarity. I knew when to sit out and I knew when, you know, what time of the day is gonna hunt, I should hunt and it's gonna offer the highest probability trade, right? That there's no point of hunting on, for example, a USD bank holiday. Now, this is the biggest, tool that you can use when it comes to your weekly and daily profiling. Days where there are big news drivers are going to be manipulative in comparison to the days that lack news drivers, which shows what days are likely to be your high and low of the weeks. For your daily profile, you know the times of day where expansion is likely to occur because the calendar tells you this, the day of the week the event is, and the time of day that that event is on the day that it gives. That is such a key thing to understand. People overlook this. This is telling you when the move comes. All you got to do is this, understand the framework you're in on that day to show you what that news event is likely to do. That is it. Remember, framework before entry. You're finding an entry inside of your framework. Power of three framework for the day. Is there a fair value gap for me to get an expansion? Entry, done. Don't overcomplicate the entry. It's about recognizing the framework at hand, right? Now, for your daily profile, you know the times of day where expansion is likely to occur. This helps you daily profile your daily power 3 more accurately. When you're able to use this calendar and see how it interacts with the PDRA matrix, it becomes very, very predictable to where the market is repricing to and therefore easier to trade. Another key component I consider is the ADR. Now, if the main end of the range is put in, which would be the high of a bullish day and the low of a bearish day, that's important to me because then I won't be looking for expansion, but rather I'll look for a scalp back into the daily range. If the ADR is exhausted nearing the end of the New York open kill zone, then London closed kill zone usually offers 15 to 25 pips. Usually could even be 30 to 40 pips sometimes, especially if New York hit off a PD array, you can get quite a displacement back into the range with the London closed kill zone. Now, this is a very dirty trick that I found. This is something I found through, you know, just back testing. I just stumbled across it, tested it, and test this for yourself. This is very, very, very nice, right? This is my personal 3 4 hour candle method for mid New York open kill zone and the London closed kill zone entirely. I'd prefer if you guys keep this within the mentorship. This is something, that you can make your edge, teach it to loved ones and whatnot. So let's get into it. There are 3 key 4 hour candles to consider inside of the trading day, right? No, this will be different on the DXY and can only be gauged on the actual currency pair being traded, right? The first 4 hour candle is from 1 to 5 a.m., which encompasses the entire London open kill zone, right? The second is from 5 to 9 a.m., which captures the lunch period and half of the New York open kill zone. The last one, and the one that my attention is on through the day, is the candle from 9 a.m. to 1 p.m. New York time, which captures the end of New York open kill zone and the London closed kill zone. You can see the size of this candle usually is significant, showing good opportunity to capitalize on a trade setup. This is something I found myself when testing this, and it's a very effective tool for days with 8:30 a.m. USD news events, as that 9 a.m. to 1 p.m. candle holds a lot of movement on those days, right? So the candle will recognize this, right? You see how you get a lot of 3 bar formations with this candle, and this one being the expansion, right? And this is one of those, and on the next day, this is another one, right? So using these 3 candles and the lesson prior to this regarding the open high low close and the open low high close, you can gauge where the third candle is likely to expand towards. Treat this like your daily candle inside of the trading day. Based off of the candles before, you can anticipate its expansion. Line the open of the candle and wait for protraction and get in line with the side it's likely to favor its expansion. The bottom example is a very textbook delivery. See how we swept the previous candle and delivered higher, right? Midday reversal for New York open kill zone. The next candles are likely to deliver to at least the premium fair value gap, right? We're looking at here. You see how this candle swept this candle's low. Let's say there was perhaps a news event I didn't check. Now from here, we have this fair value gap. You can at least frame a trade to there in the the end of New York and London close kills in like a 5 minute time frame can find just a scalp to there, right? Now, you could have framed a scalp on the 5 minute time frame using the next 4 hour candles open, like I just said. If the London open kills on 4 hour candle placed in a clear low on a bullish day, it's very likely that the 9 a.m. to 1 p.m. Candle continues the second candle's expansion. But remember, consider the ADR being exhausted. So what does that mean? Let's say the first candle, yeah? The first candle encompasses London open kills on the entirety of it. Let's say that traded and made a clear high or low of the day, right? And this candle doesn't exceed it. Given that this candle has traded into a PD array, you can expect continuation from this. If this candle traded up into a PD array and rejected, you can expect the next candle to essentially carry on the rejection. Where this candle trades is very important. This tells you where this candle is going to go. If this was into a PD array and rejected, this candle you can frame reversal. This candle shows that it's making it's repricing to buy side liquidity and premium of the range. You can continue the continuation of it. This is this if you understand the power this holds, it's insane, right? Not a lot of things get me excited when it comes to trading, but when I stumbled across this and I started implementing it, and this is a big key behind the London closed kill zone trades that I've been posting for you guys. This, it kind of, it excited me. Now, this is a large reason to why I favor New York open kill zone trading. This, in line with everything else I've taught in this lesson of routine, will enter you into a new realm of trading. Remember, this is only a tool and technique. I don't want you guys to think, okay, that's it, I got it now. Holy grail, 4 hour candle. No, it's all in line with bias, higher time frame narrative. It still has to require framework, right? Daily and weekly bias still trumps this, right? And it's you need your daily and weekly bias for this to be effective because this is going to be in line with your weekly and daily narrative. If you do elect to use this, then consider the 5 minute time frame to trade the 4 hour candles range. So trading the 4 hour candle, now we're looking at this, right? This is the candle that we're taking as an example. So when using this 4 hour candle for scalping framework, you want to treat the 4 hour open at 9 a.m. on your 5 minute chart as midnight opening price. You need to know what way the expansion is likely to favor, which chapter 6 lesson 1 goes into, and then wait for a protraction and frame a move in line with the expansion. Essentially, this is your daily candle for the scalp framework. You can see the protraction into the discount of the range to a bullish order block inside of the optimal trade entry. You don't always need a market structure shift. Now you could, but you already know the next candle is likely to expand higher, so any retracement entry is fine. Given as well that, remember from the open high low close video from chapter 6 lesson 1, we're not expecting this candle's low to get taken. So just the optimal trade entry, which is what I've done here, this low here, did this high, order block, you can enter here, right? That's what you could frame. Now the target you could frame to your trade is, you know, the close or 50% of this candle's fair value gap from this candle's low to this candle's high. And that's your framework that you work. And it's very simple. It's very simple, right? Now, I use this framework only if 7 to 9 a.m. New York doesn't offer a setup. A lot of the times 8 a.m. New York offers a setup for the day that I look for, right? Now, if it's a bit slow and dry, I'd fall back to this, right? This is what I fall back to. If I don't find a trade from 7 to 8:30 New York time, I'll just wait for the open of that 9 a.m. 4 hour candle. I'll use the open of it, see where the expansion is likely to favor, and I'll try to trade that 4 hour candle. Now, when there is news that favors the London close kill zone, the 1:30 p.m., the 8:30 a.m. New York time, and 9:45 a.m. and 10 a.m. New York time events, red folders, orange folders, this is very, very effective because that last 4 hour candle, because of the news event, it's gonna hold a lot of the movement throughout, the day because of that news event being at that time of the day, right? So that's the end of the lesson. Now, quick recap and take a picture of this. This is essentially the flowcharts put together entirely together. This is the entire routine I do. This could be your trade plan. The bulk of our analysis is done in sieving out which way the weekly candle is going to expand towards. We then create a weekly profile and use the economic calendar to aid us in the likely weekly profile. For example, Tuesday, how the week, etc., using the where the news events are throughout the week, and the PDRA matrix. Remember. Now, we can use Sunday's opening price to gauge weekly expansion to see if we are expanding from Tuesday onwards after placing a high or low of the week. Remember, the 1 hour market structure shift with displacement is a good indicator for reversal through the week. Focus on the daily expansions through the weekly profile. If in doubt, wait for it to be clear. Now, what do I mean through of the daily expansions through the weekly profile? Once you have your weekly profile, you know what day is likely to be the high or low of the week. Not every single day in a bullish week is bullish, so you'd wait for preferably the days, of that weekly profile to be in line with your bullish expansion. You want to trade the bullish days of the bullish week, is essentially. Now, use daily profiling with midnight opening price, sorry, to try and find a setup in line with the expansion. Understand every day is a power of three framework and that we work in the form of daily candles open, high, low, and close. I don't have slides on the US 10 yet, but remember to also frame that for your DXY higher time frame bias as well. It's just another tool. Now, remember, not every day will offer a clean day for trading. A lot of times you'll be unsure of the weekly profile at hand, and maybe by Wednesday it's clear. Even one trade on a Thursday, as long as it's crystal clear to bank a 2 to 4R, is enough for the week, right? A lot of times people trade the Tuesday, they make something good. Wednesday, they make something else, and then Thursday and Friday they gave it all back. Know when to just, enjoy the rest of your week. This lesson should be essentially everything you need to frame a trade plan. Everything I use, I've exhausted it in, 70%, 80% of the stuff that I use is exhausted in this one lesson, right? This flowchart shows you everything, the routine. Where is the monthly and weekly expansion likely to be to? Okay, you know where the weekly expansion is going to be towards. How is that weekly expansion likely to form? The weekly profile, the daily expansion throughout the week. Then you have your daily profile for your daily expansions. Intraday Power 3 framework, the direction of the daily expansion, accumulation, using midnight price manipulation, displacement market structure shift, retracement into a fair value gap and block, TP at the next opposing array. Simple, right? So that's all for this video. Any questions, always ask me. And I think I have one more video left for you guys of this chapter, maybe two. And until next time, and I'll see you guys in the next one.